Hello. In this presentation, we will take a closer look at a trading strategy based on technical analysis. This strategy is developed to predict trend reversals by using price movements and indicators. It also includes rules to determine entry and exit points for each trade. Strategy name: Divergence Strategy. Objective: to identify trend reversals and execute profitable trades. I'm now displaying the settings for the indicators we'll be using for trading. Please pay close attention as we optimize them and add them to the chart. Let's start with our first example. As you can see on the chart, while the price candlesticks are consistently making new lower lows, the MACD DEMA histogram is making higher lows. This action is referred to as positive divergence and signals a potential trend reversal, but it is not a strong enough signal to enter a trade definitively. After observing the positive divergence action, we are looking for both the orange and blue moving average lines to cross above the black moving average line. A single line crossing upward is not sufficient. After both upward moving lines have crossed, we expect a valid retracement movement in the candlesticks, which we can see on the screen. Following the valid retracement movement, spotting a bullish engulfing candlestick pattern confirms that all conditions have been met. With the formation of a very strong signal due to the fulfillment of all conditions, we have reached the initial target of a 1:2 risk-reward ratio. You can choose to close the entire trade or continue by taking partial profit and moving the stop-loss level to the entry point. If you enjoyed the video, please hit the like button, and I kindly request you to subscribe and enable the notification bell so that you don't miss out on proven profitable trading strategies that I'll be sharing in the future. Let's take a look at another example. Here, the price is once again making new lower lows, but the indicator is forming higher lows. Once again, we have a positive divergence, indicating that a trend reversal may be imminent. After observing the positive divergence action, we are looking for both the orange and blue moving average lines to cross above the black moving average line. A single line crossing upward is not sufficient. After both upward moving lines have crossed, we expect a valid retracement movement in the candlesticks, which we can see on the screen. Following the valid retracement movement, spotting a bullish engulfing candlestick pattern confirms that all conditions have been met. And very quickly, all the conditions were met consecutively. Of course, this may not be the case for every trade. By opening the trade, we are waiting to reach our initial target. Great signal and great profit. Now, I will quickly show another example. Please follow the annotations on the chart to reinforce the long position rules. Now, let's look at examples of short positions. While price candlesticks are consistently making new high levels, the MACD DEMA histogram is making lower highs. This action is called negative divergence and signifies a signal that the market may turn downward after a while, but it is not a strong enough signal to enter a trade. We can see that both the orange and blue moving average lines have crossed below the black moving average line. And here, we observe a valid retracement movement. Here, with the formation of a bullish engulfing candlestick pattern, the conditions for entering the trade have been met. Even though the duration of the trade extended, we still reached the target. Let's look at another short position example. While the price is again making new highs, the MACD DEMA histogram is making falling highs. Negative divergence is observed and the possibility of the trend turning downwards increases. After the price advanced a little, the yellow and blue moving average lines crossed the black moving average line downwards. After this transition, we need to first see a valid withdrawal movement and then an engulfing candle formation. Now let's quickly look at a different short position example and then make the trading strategy a little different. With the trading model you have watched up to this minute of the video, you can buy, sell for the medium and long term, but let's continue the education by revising the strategy for traders who trade for very short periods of time. Dear friends, now we are closing the 200 parameter, one of the 3 different LSMA lines we added to the chart. This moving average was showing us the direction of the overall trend within the time range we were trading. However, now by closing the 200 parameter moving average line, more entry and exit opportunities will be created and will therefore be suitable for very short-term investors. Let's start right away. As you can see, the orange moving average line crossed the blue moving average line downwards. This is called the death cross and gives an idea that the downward trend will begin. At the same time, the signal for a downtrend is strengthened as the price makes new higher highs and the MACD DEMA histogram makes lower highs. Of course, these signals are not enough for us to enter into the transaction. We want to see the formation of a valid pullback movement first and then the engulfing candle formation. Since we only use the LSMA line in 2 different periods in this trading strategy, we set the initial target ratio as a risk-reward ratio of 1.5 and achieve the target. Let's look at another example of a short position. But please watch the video without skipping because I will soon show an example of a transaction that was closed at a loss despite complying with the rules of this strategy, and I will explain the reason. Now let's look at long position examples and finish our video. As you can see on the screen, the orange moving average line crossed the blue moving average line upwards. Also, the price is making lower lows, but the MACD DEMA histogram is making higher lows. This is an uptrend signal. As you can see on the screen, the orange moving average line crossed the blue moving average line upwards. Also, the price is making lower lows, but the MACD DEMA histogram is making higher lows. This is an uptrend signal. And I left the surprise transaction to the end because I wanted you to fully master the rules of trading. Now, I bring to the screen a trade that failed even though all conditions were met, and I ask you to write in the comments section why this trade failed. Thus, we will not stop our training with just watching the transactions on the screen, and we will enable you to make detailed analysis. Please watch carefully and write your opinion in the description section.